Welcome to The Explainer. Today we are digging into the Charles Schwab playbook. We're going to break down how this one company didn't just survive a potential crisis, but actually used it to start rewriting the rules for the entire wealth management industry.
All right, so let's just jump right in. You got to remember, it wasn't that long ago that the whole financial sector was on edge, right? There were real fears of a banking crisis, and it all kind of boiled down to this one key concept that was putting immense pressure on firms just like Schwab.
Yeah, cash sorting. That was the big storm cloud on the horizon for Schwab. I mean, it makes sense, right? Interest rates go up, and you, the client, are going to move your cash to get a better return. But for a bank, that's a huge problem. It drains their cheap funding. So the big question for everyone was, could Schwab stop the bleeding?
Well, the 2025 results are in, and they don't just answer that question. They basically shout the answer from the rooftops. So let's get into it, starting with these record-breaking results. And really, this wasn't just some comeback. It was a full-on renaissance.
Okay, first up, just look at the sheer scale we're talking about here. Schwab wrapped up the year managing a mind-boggling $11.9 trillion. Now, to put that number into perspective for you, that is more than the entire economies of Japan and Germany combined. Just massive.
And get this isn't just the market going up. No. Even with all those crisis fears swirling around, clients handed them over $500 billion in new money last year alone. I mean, that's just an incredible vote of confidence, right?
And here's the kicker, right? All of this translated directly to the bottom line. Once those crisis fears started to fade, their profitability just exploded. We're talking a massive 38% year-over-year jump in earnings per share in just the last quarter. Wow.
And listening to the CEO, Rick Wurster, he makes it really clear this wasn't just one lucky break in one part of the business. He really hammered home that this was growth across every single front. And that really sets the stage for how they managed to pull this off.
So that brings us to the how. How in the world did they engineer this comeback? Let's pop the hood on Schwab's financial engine because the mechanics of this are actually pretty fascinating.
It's really a classic turnaround playbook. They did two things at once. They got super aggressive paying down their expensive, high-cost debt. And at the same time, that crucial, low-cost cash from clients started flowing back into their accounts. They literally fixed the problem right at the source. And by stabilizing their balance sheet like that, it directly pumped up their net interest margin, or NIM. You can just think of NIM as the core profit engine for their bank. The higher it is, the more money they're making on the cash they hold. And believe me, Schwab's NIM got a serious boost.
And check this out. This chart just perfectly illustrates the raw power of their scale. With that big TD Ameritrade integration finally done, their revenues grew three times faster than their expenses. That creates what's called operating leverage, and it's incredible. It means every new dollar they bring in is way more profitable than the last. Okay, so with the crisis officially in the rearview mirror, Schwab is done playing defense. Now they're going on offense, and they have a really clear blueprint for how they plan to dominate the future, hitting all the biggest trends in wealth management.
And a huge piece of this puzzle is winning what they call the breakaway broker trend. This is where top advisors are leaving the big Wall Street firms to go independent. Well, Schwab's advisor services unit, the part that serves these exact advisors, is growing at almost 8%. That's more than double their regular retail business. They are absolutely becoming the #1 destination for this huge industry shift.
But here's the thing, they're not just winning the wealth of today. They are being super aggressive about capturing the next generation of investors. I mean, look at this. The average new client is in their 30s, and Gen Z made up a third of new accounts last year. This isn't an accident. It's a very deliberate play to be the main beneficiary of the great wealth transfer.
So when you look at their roadmap for 2026, you can see it's basically a three-pronged attack. It's all designed to build what you might call an unassailable competitive moat by jumping into the fastest-growing parts of the market.
Yeah, these three pillars are everything: private markets, digital assets, and AI. What this tells us is that Schwab is trying to become a true full-spectrum wealth platform. They want to be the one-stop shop, the single place where you manage everything you own: public stocks, private deals, and digital assets. Everything.
Okay, so let's bring this all home. What's the big takeaway here? Schwab's performance, it isn't just about one good quarter. It's really a playbook for how to become what we're calling an alpha brand in the world of modern finance.
So what this all shows us are the new rules of the game in wealth management. Rule 1, scale is everything. It's the ultimate weapon. Rule 2, a single, unified platform is the new moat. And Rule 3, alternative assets like crypto and private equity, they're not alternative anymore. They are table stakes. Schwab isn't just playing by these rules. They're literally writing the book.
Which really leaves us with one final big question. In an industry that's already full of giants, when you look at Schwab's incredible scale, their aggressive tech plays, and their lock-on that all-important independent advisor channel, have they built a fortress that nobody else can even dream of breaching?